Hello everyone and welcome back to another midweek technical look here at xm.com. And today we're going to have a look at Bitcoin, that it had a strong rebound of the 6-month low on US100 that also created some upside movement after its deep bearish correction, and of course a pound yen that it had a strong upside rally on yesterday's session. So having a start with Bitcoin, the price it is moving higher after the strong bounce of the 6-month low at 8,500, and it's also holding within this long-term ascending trend lines that we can see from the weekly chart that are taken from the lows back in September of 2023 and also the lows in August of 2024. So as long as the market is recovering and it also moves above the next resistance level, which is coming from 92,770 and also slightly higher the 20-day SMA at 93,500, then the price it will battle with this uptrend line near the 96,000 region ahead of the 99,000 psychological mark. So if there is successful move above the uptrend lines, then the outlook, it may test the short-term downtrend line around the 102,000 level ahead of the 50-day SMA at 103,300. On the other hand, if this bearish movement continues and the price breaks below the 6-month low of 80,500, then it may battle with the 76,500 support level, which is taken from the lows back in March of this year, and even lower. It may also have a touch of this trough from April of this year around the 74,500. Now, having a look at the technical oscillators in the daily chart, the RSI is pointing upwards and it's approaching the 50 region, but is still below it. And the MACD oscillator is strengthening its upside momentum. It crossed above its trigger line, so both of them are confirming this bullish correction that we have over the last few days. Now, switching to pound yen, we're going to have a look at the price that we have the price reacted sharply to the early release of the OBR's forecast yesterday, which included lower growth projections before Reeves' comments, and we can see that right now the market is seizing somewhat and is holding slightly below the 16-month peak at 207.18, and is also battling with the previous high at 206.80. So if the market recaps its gains and moves lower, then the next support will come from the 204.20 level ahead of the 20-day SMA at 203.70, and even lower we may see a rebound of the 50-day SMA, which is overlapping with the 202.30 support and this uptrend line. Now, in the bearish scenario, if there is a break below it, and also if we have a closing day below that diagonal line, then the market, it may test the previous bottom at 199.10. On the other hand, if there is a continuation of this upward movement, then the next resistance is coming from 208.10 and 209 around the number. Now we can see that the RSI is pointing downwards after the pullback from the 70 level. That is suggesting that we have an overstretched market. However, the stochastic is still pointing upwards. It posted a bullish crossover between its percentage K and percentage D line. So if there is also a climb above the 80 region, it will confirm more gains. But if we see the stochastic turning lower, then it will confirm that we may see some bearish correction maybe until this uptrend line before continuing the upward movement. And also having a look at the US100, that we had a strong bullish movement over the last 4 days. It added around 6%, and it also moved above the 25,000 region and is currently testing the diagonal lines, this medium-term uptrend line and also this short-term downtrend line around the 20 and 50-day SMAs at 25,200 level. So we could say that this area here is very important for the market, and if there is a successful move above it, then it will confirm that we may see another test of the 161.8% Fibonacci extension level of the down leg that we had from the peaks around the 22,400 and the lows at 16,300 at 25,900. Even higher, the all-time high at 26,250, it will be the next target, and even higher, a new all-time high around the 26,500 and the 27,000 level. On the other hand, if there is again a slip below the 50-day SMA, then the price, it may retest the previous bottoms at 24,300 and 24,000 psychological mark. Now the RSI is pointing slightly up above the 50 region. The stochastic is moving sideways around the 80 level, so it's suggesting that we may see the price turning lower, and we're going to have maybe another bearish correction. But I think that the key level in this chart is the 25,000 area and 25,200 to confirm that we may see some more upside movements in the market. So that's all from me. Thank you for watching and have a great day.